How does the election change monetary policy's path going forward? What's the right level of interest rates, and how boned is the labor market right now? We did get a new interest rate for the most important interest rate in the entire world. What's up, apes? Welcome back to the 𝗙𝗟𝗡𝗚s Daily Podcast of the Day. Thank you all for joining us here on the world's most popular podcast. Hope you guys are all killing it out there. There's a lot going on in the world, and we got a lot to talk about here today. A lot on everybody's minds, of course. A lot of change going on right now. And I think most importantly, what we start off with is, guys, do you like my shirt right here? This is a brand new shirt my girlfriend just bought for me. So let me know if you like it, if it kind of fits my vibe down in the comments. I think I'm going to buy about 50 more of them because they're so goddamn comfy and they make my shoulders look bigger than they actually are. So that's always ideal. It's better than taking steroids, right? Which would be the next step. So, okay. Speaking of other things going on in the world, equally as important as my shirt here, this is a big week. In case you guys haven't heard, the United States just re-elected President-elect Donald Trump to become our 47th president on January 20th, 2025, and markets were absolutely loving it. And they have been so far. Completely ripped on Wednesday after the announcement. Basically, everything rallied. Oil prices fell. It was a great sign for what financial markets expect from a Trump administration round two. Today, continued the uptick for the most part. Now, we saw the Russell 2000, small cap Russell 2000, down about 35 basis points on the session here today. Financials had a relatively rough session as well, potentially something to do about less regulatory changes going on there, making, balance sheets a little bit less solvent, or not less solvent, but less fortified, I guess would be a better word, but still, less restrictions. Wouldn't that mean more opportunity for lending? Who knows? But either way, financial small caps were down for the session. S&P 500 was up 74 basis points on the day. Tech had a solid day for the most part, in the face of Wolfspeed. Wolfspeed is a chip maker. We'll talk about them in a quick second. Disgusting, horrible, embarrassing day. So we might have to pour one out for them and their shareholders. NASDAQ was up about 151 basis points here in the session, 1.51%. And the Dow, not that anybody cares at all, moved 0.0% for the session, or down about 0.59 points. Not basis points, just Dow points. And that's out of 43,729. So very, very small move for the Dow. Again, not that anybody cares at all. The Dow is 30 stocks, and we should completely ignore it at this point. WSO Alpha portfolio is up 1.47% on the day, 147 basis points, more than doubling the S&P 500's performance on the day, just underperforming the NASDAQ by about 4 basis points. That's typical for us, and one of our holdings in particular absolutely carried the team for the day. It's one that we wrote an equity research report on towards the end of the year, and our price target is about to be hit. So stick around for a couple of minutes, and we'll break down exactly what's going on there. But first, we got some banana bits to talk about here. So, first and foremost, today was a Fed meeting day, a Fed cut day. I was trying to build up the suspense, but there's no surprise at all. Everybody and their mother and all those dead voters even knew that Jay Powell was about to cut interest rates here today. So click on that first link that you see in the Peel tomorrow. It is the link to the Wall Street Journal's coolest tool, the Fed Statement Tracker embed. It shows you exactly what the changes are. Though sometimes it's hard for my brain to process a little bit because of how they format it, but it almost feels like a little puzzle when they do that shit, so it still is kind of fun. Meanwhile, moving on down, Powell basically told reporters that he would tell Trump to suck fat one if he came out there and tried to fire him, demote him, or whatever. It was honestly a badass scene. The reporter asks Powell, some people in Trump's administration have been saying that they want to demote you. Are you going to step down? And he just goes, no. That was it. Then the next question was something along the lines of, has the Fed considered the legality of a president asking the Fed chair to step down and another governor to come up, or something like that? And what did Powell say? He said it's not permitted legally, or something like that, not permitted under legal processes or something like that. But he kept it short and sweet and just kept moving right along. That is what we absolutely love to see on our Fed chair. Nice and boring. No drama right there. Meanwhile, this was a crazy tweet. Crazy tweet of the day award goes to Politico's California bureau chief. I think his name is Chris something with a Chris. I actually remember looking at his last name, but it's completely unpronounceable, so I'm not even going to try. But Politico's California bureau chief claims that the Harris campaign is currently at least $20 million in debt. Now, that's despite raising more than $1.2 billion since the hot swap on about July 22nd. They spent more than $650 million on TV ads, obviously lost the election, and now are $20 million in debt. It's kind of like when Kanye was like 50-something million dollars in debt despite having the best music that anybody has ever created, despite inventing music for, I mean, if we're going to be honest here, that's effectively what happened. So maybe Kamala could call up Kanye to get some tips for there, get some financial advice from Mr. West. That always seems like a great idea to me. Canada ordered TikTok to shut down its Canadian subsidiary on Wednesday. It's not what it sounds like at all. It's a pretty provocative headline, so I'm hoping a lot of people will click on it, obviously. But you can still access the app. They just don't have a Canadian-specific business anymore, which seems, if you ask me, like the worst of both worlds. Moderna posted a surprise profit, but shares still absolutely tanked because who the fuck is still getting COVID shots? Germany's government coalition completely collapsed as well. There's going to be a confidence vote planned for January 15th as the super mega Democrat Party and the super Democrat Party, or whatever they're called, ultimately split up. And so basically Germany's Prime Minister Olaf Scholz, Chancellor Olaf Scholz, fired the finance minister of the country, and that kind of dissolved the coalition. So they're going to have another vote of confidence for Mr. Scholz and his coalition by about January 15th, and we'll see if we can get some change going on in Germany. Finally, really interesting story here today. So everybody remember that French trader who defined balls deep by putting $30 million on President-elect Donald Trump to win the election? Yeah. That guy is killing it. He's estimated to have made about $79 million in pure profit off this, which, if you can do math, means that he actually made probably somewhere about $109 million in total, if we're including the principal right there. So an absolutely incredible trade. And obviously, whenever anybody makes money, the French government gets pissed. They don't like when you make money unless you're selling wine or cigarettes, presumably, because that's all it smells like over there. But the French government is now investigating this guy, and I'm sure it's so reading this article kind of reminded me of the it wasn't Joseph Stalin, but it was somebody in his cabinet. I think it was like the law enforcement guy in his cabinet or something like that. But he basically said, show me the man and I'll show you the crime. And that's kind of what it sounds like. The French government is basically saying, show me the profit and I'll show you the crime. That's what it sounds like right here. Unless there is actual crime going on right now, which, it's Polymarket, offshore crypto betting exchange. Kind of ripe for crime right there, if you ask me. But all right, let's go ahead and move into our big story of the day. Macro Monkey 𝗟𝗑𝗏 speaks. We're going to try to keep this relatively quick, even though the written version is a lot longer, because really there wasn't a whole lot going on here, and it doesn't lend itself too well to video, especially when you have a face that looks like mine. But 𝗟𝗑𝗏 did speak here today on Powellnomics. We're going from Bidenomics over into Powellnomics. As much as we all love having a president who is in borderline late-stage dementia, we definitely don't want that for a Fed chair. Now, it's super entertaining when the president falls off a bike or struggles to eat an ice cream cone or can't say a sentence or read a teleprompter or say the numbers 30330 and sound like a human being. All of that, absolutely hysterical. Don't get me wrong. I'm just as here for it as the next guy. But with my Fed chair, the guy who really runs the country, in my opinion, we want somebody pretty boring. We want somebody young at that ripe age of 71 years old, like Jerome Powell is right now. Some people get their fucking driver's license taken away at 71. Other people control the entire damn economy, and that is exactly what we're seeing from Mr. Jerome Powell. But he's killing it. He is, I assume he's the youngest person in Washington, D.C., and definitely the youngest person in our government. So he always kind of brings a little bit of that fire up the money printer vibe. My portfolio absolutely loves it. They were loving it again yesterday. And so was the 𝗟𝗚𝗚 portfolio, like we mentioned beforehand. So what happened? Well, yesterday the Fed did exactly what everybody knew they were going to do, lowered the federal funds target range by about 25 basis points. Now, the world's most important interest rate, the most underlying interest rate, is now in a target range of about 450 to 475 basis points. That's the lowest level that it's been at since March of 2023. Excuse me. And that brings total cuts in 2024 so far to 75 basis points. Really, not much change between the September statement and the November statement that the Fed just released here. The minimal changes do kind of add a little bit of detail on there. So, for example, they removed the part where the committee says, quote, the committee has gained greater confidence in inflation, that inflation is moving sustainably toward 2% and judges that the risks, blah, blah, blah. So now it just says the committee judges that the risks, blah, blah, blah. So it's not we're moving towards this target anymore. We're basically at this target now. And then they also added, since early in the year, labor market conditions have generally eased. And so that's, a good thing. It's a good thing coming from how tight the labor market was back in 2021 and 2022, because arguably those wage push played a role in kind of the rising inflation that we saw throughout those years. So the wage push mechanism pushed up inflation for a good bit. So the fact that they're adding this in here, labor market conditions have generally eased. You know, it might seem like it's not too good for the labor market, but it's, you know, context is what matters here. We know that we're coming off of a point where things were a little bit too tight. So the biggest change, though, was that unlike in September, this was a unanimous decision. Michelle Bowman, who voted for a 25 basis point cut in September, when instead we got a 50 basis point cut, joined the team this time, voted for a 25 basis point. These modified comments also indicate a view that the labor market is at or near the Fed's fall employment mandate. And then actually in the Q&A session afterwards, 𝗟𝗑𝗏 basically said that, you know, they are, and we basically achieve price stability as well. So what does that mean? The Fed is upholding both of its mandates, aka a soft landing. Now, we've been saying this for about a year or so now. So the soft landing just keeps getting more and more confirmed. The rest of these, you know, B-list media organizations are catching up to the A-listers over here at the Daily Peel global headquarters. So they're all starting to kind of say that we've had the soft landing, but we've been on this for a hot minute now. So either way, the best part of the conference, now that the boring shit is over, the best part of an FOMC decision day is easily the post-conference or the post-meeting Q&A. So it's kind of like listening to Kendrick or listening to Eminem, because you don't really know what they're saying the first time that you're listening. Like, you can hear the words, but you don't really know what they mean, but you know they're spitting absolute bars, and that's exactly what 𝗟𝗑𝗏 was doing. So right off the bat, he was hit with that question that was on everybody's mind, and it was one of those 3 questions that we asked yesterday. So in yesterday's edition, the 3 questions that we asked were: how does the election change monetary policy's path going forward? What's the right level of interest rates, and how boned is the labor market right now? So the first question was exactly what we were wondering: how does the election change things? And despite the fact that the president-elect is a guy who once said, quote, "So far, I'm not even a little bit happy with my selection of Jay," and I asked ChatGPT to compile a list of some of the worst things that President Trump has ever said about Jerome Powell. Let me go ahead and pull that back up here. So he, here, let me see. I can't find him right now. Oh, okay, perfect. So far, I'm not even a little bit happy with my selection of Jay. And then my other favorite one was: the only problem our economy has is the Fed. He said that in December 2018 when he was mid-trade war with China. So, you know, 𝗟𝗑𝗏 has his partner in crime back in office. These two thick as thieves, peas in a pod. Clearly, they get along great. But Powell handled it like a professional. He said, you know, it's nothing that we consider right now because that election and any policy doesn't change things in the short term whatsoever. You know, he basically said, yes, there have been policy proposals, but the bar of the day was how he responded to this and saying, like, yeah, you know, there's all these policy proposals, all this shit flying around out there. But from a Federal Reserve perspective, he said, quote, "We don't guess, we don't speculate, and we don't assume," which, god damn, that got me fired up for Jay. I would go to fucking war for this guy if he's speaking like that more. Most of the time, he sounds like the fucking nerdiest guy from your college economics department, but still, I would go to war for a guy who talks like that. And then as we kind of continued down, there wasn't really much news that we didn't already know. So basically what we got was kind of an updated view of Jerome Powell's assessment of the economy, and it's exactly what we've been talking about here at the Daily Peel Global Headquarters for quite some time now. So he did note the weakness of the October jobs report, wasn't necessarily spooked by it because it's just 1 month. The Fed kind of prefers to look at the unemployment rate in its entirety when it's judging full employment. It'll rather look at, you know, the unemployment rate compared to, it's basically the unemployment rate and the labor force participation rate that they're trying to maintain to get to that maximum employment aspect of their mandate. And so, you know, despite the fact that October's additions were pretty low, unemployment remains low, labor force participation remains, it's still lower than it was pre-pandemic, but in a relatively healthy range, at least for our production and inflation right now. He wasn't asked directly what the right level of rates was, but he was asked to comment on the rising bond yields, and this was easily the most interesting aspect of the entire conference to me. He was basically asked to comment, like, why are bond yields completely ripping? Is it because everybody and their mother expects inflation to return? And Powell basically said, shut the fuck up. Absolutely not. That is not what anybody is expecting. And he basically said that the reason that he thinks that bond yields are rising because of enhanced growth expectations. And then the reporter was like, does that mean enhanced deficit expectations? And he said, we don't comment on fiscal policy, but we do, basically just saying, like, he thinks the bond market is pricing in higher growth more so than higher inflation, which is kind of reading between the lines, likely going to be driven by those deficits. He also kind of shouted out one of the less commonly followed economic indicators, which is the 𝗟𝗏 revisions, or the National Industry. Oh my god, am I totally forgetting what this is? It basically is kind of an estimate. It's alternative estimate of GDP, and it gets more specific on state and local governments as well. We'll give an explanation on exactly what it is if that's something that you guys want, but basically just the higher GDP estimates and the higher GDP outlook going forward. 𝗟𝗡𝗚𝗏 thinks that's what's speaking to the bond market more so than higher inflation expectations. So like I said, we didn't really learn anything new. We did get a new interest rate for the most important interest rate in the entire world, but otherwise a relatively boring day, just how we like it at the FOMC. All right, moving on down into our big stock movers of the day. No boringness in the market here. We got some huge moves on both sides, both ripe and rotten. Starting off with Under Armour. So Under Armour, obviously, basically Nike's biggest competitor, even though Nike's market cap, I think, is 120 billion in market cap. Under Armour might be 5 billion in market cap, if that. But Nike goes out there and they focus on the LeBron Jameses, the Serena Williamses of the world. They're like, we want you to wear our shit. Under Armour's new strategy is to go after the fucking losers. So they're going after the yous and me's of the world out here, and analysts completely loved it. So the new strategy is called the Affinity for the Underdog. So I don't know exactly how they're putting this into practice, like what they're doing to their products, because I don't buy Under Armour. But I don't really buy Nike either, to be honest with you. I basically never buy clothes. But overall, the Affinity for the Underdog brand strategy is to kind of capture the masses. At least that's what they're thinking, is to kind of prey on the instincts that everybody has, that like the underdog, of wanting the underdog to win. And analysts were pretty fired up about that and the guidance that the company gave with that new branding strategy in mind. Even though for the current quarter, revenue fell 10.7% to $1.4 billion, although net income at the same time did surge 69.5%, a very nice 69.5% as well, and they see some opportunity for margin expansion given this new branding strategy. The Ted Pick, the CEO, the example that he shouted out was that basically there was like one hat that Under Armour used to sell for $25, but with the Affinity for the Underdog brand, they're now listing it at $45 and it's selling at basically the same rate. So that was kind of the most positive outlook going forward. Moving on down into our second big ripe mover of the day, we absolutely love to see Zillow up 23.77%. So Zillow completely killed it in the second quarter. Very solid earnings report. Revenue was up 17% year over year and completely smashed expectations at $581 million. Analysts were looking for about $551 million. Net losses came in at $20 million, where the market was looking for $40 million. And by the way, in case anybody forgot, we gave this thing a $75 price target at the beginning of this year. I think it was January 26th or something about that. So if I go ahead and pull up the share price after closing today, I don't think it's at 75, but it's definitely close. 72.63. Meanwhile, going back to January, it was closer to about, so we started this report when it was in the 30s. It was at about 35 in the beginning of December. Then by the time that we published the report, it was up closer to the 50s, so we gave it a hold rating because of that $75 price target. Originally it was going to be a buy, but still, go subscribe to 𝗟𝗚𝗚𝗏 if you don't want to miss out on the next one. Our genius aside, however, the important thing here is that Zillow's mortgage segment grew 63%. And that's not necessarily because the mortgage market is on fire anymore, but because Zillow is gaining a ton of market share. The company has been very clear for the past couple of years. They want to create a housing super app where you can do the entirety of the process right within Zillow. That means selecting the house, getting the financing, closing on the house, all of that bullshit that goes on in there. And the less realtors that you have to deal with, the less commissions that you have to pay, and the more money you get to keep and put into, revisions or restorations around your house. Because we all know whatever houses we can afford these days are absolutely going to need a bunch of restorations. I wish I could tell you guys all the work that we did at this place in the past 2.5 months or so that we've been here. But overall, let's go ahead and move into the rotten movers of the day. First rotten stock, we have Wolfspeed. So in case you don't know what Wolfspeed is, they're kind of like the equivalent of salt and vinegar, because absolutely nobody wants their chips, and nobody wanted their chips at all last quarter. That is for damn sure. The stock was down 39.24% on the day after reporting sales that missed expectations and weaker than expected guidance. So the company, they make chips that are specialized for energy and power companies as well as radio frequency applications. In case you can't tell by how I said that, I don't know what that means whatsoever. But the company did report revenue of $194.7 million against estimates for $200.3 million, coming in just shy of that by about, 1.5% or so. Wall Street was looking for about $214 million in sales for the fourth quarter, but the company came out there and said, we actually have no fucking clue what our sales are going to be in the next quarter, so we're going to give an enormous range of 160 to 200 million. Now, it's a $40 million range, but it's what's that, 20% of the total being $40 million of that, to like you giving yourself a 20% margin of error on your revenue projection. That is absolutely enormous. Analysts don't see a path to profits coming anytime soon, and there's basically just no confidence around the stock whatsoever. Speaking of too much confidence, to be honest, I was going to say no confidence, but really too much confidence is the issue here. Trump Media and Technology Group Corporation. The stock was down 22.97% on the day because, like Eminem, you got to come back to reality at some point. And when you come back to reality, oh, there goes gravity, and it's pulling share prices right down back to earth. So the stock was down 22.97% on the day instead of losing themselves. Investors only lost money. So this stock went on an absolute tear, like an NVIDIA level tear from September 26th up to about November, I think it was October 29th was the actual peak. It more than quadrupled. It was up about 325% in that period. Fluctuated a little bit in the week, or in the trading week leading up to the election from Tuesday to Tuesday, and now it is completely falling through the floor. So I think I think a couple of things about this. First and foremost, clearly it was trading entirely off sentiment around Trump's odds to win the presidency. Now, I don't know if people thought that this was like investing in, buying those contracts in Polymarket or Kalshi and he would win and suddenly you would be like a billionaire or something. But whatever, people are still buying into the stock, hyping him up, donating to his legal funds, essentially is what this is. Now that he is president, there's not really that cause anymore, so it seems like the stock is going to actually have to trade on fundamentals again. A crazy idea, but the good thing is the company did report earnings on election night as well. Very convenient timing to minimize attention from a report. Revenue fell only 5% from Q3 23 to Q3 24. What do you think Trump Media's revenue was? Like, what do you, $100 million, $500 million, $50 million? How about $1 million? $1.01 million is what Truth Social made. Now, for reference, the company also lost $19 million, so they lost 19 times that amount because they spent 17 times their revenue on G&A costs alone. That's general and administrative. That's the back office employees. That's or I guess it would be like salespeople too, but they just called it G&A. They considered selling and marketing together in general and administrative in a different line item. And interest income was 4.7 times their revenue. So let's go over that again. Losses came in at $19 million. Revenue was $1 million, and interest income was $4.7 million. So just under about $5 million or so. So this company, their operating income is probably even worse than this $19 million loss because once you, if you take out that interest income, then you're losing, $24 million, just about $24 million in total. So this is basically if we want to consider what this company is it effectively a bond that, because the only thing that matters, it seems, is that interest income, and so that would be a fixed income investment. So Jesus Christ, this is just, stay away from this, guys. Please don't buy it. Please don't sell it because it's so low volume that you never know. One piece of news could have this thing shoot through the roof. Just stay away from it. I don't care if you like Trump. I don't care if you like Kamala. I don't care if you like fucking Joseph Stalin, to be honest with you. Just stay the hell away from this thing. Okay, moving on down into our last story of the day. We are here to make M&A great again. We're making America great again, right? So we might as well make M&A great again as well. We all know nobody wanted the fucking hall monitor to be the class president back in high school. Even the goddamn hall monitor's parents realized that Captain Clipboard is more of a snitch than a statesman and absolutely does not belong in the presidency of anything. But for the past couple of years, the M&A market has been overseen by the hall monitor's hall monitor, the kids that even the band kids wouldn't hang out with back in the day. But that is supposed to end in just a couple of months. So FTC Chair Lina Khan, she was sworn into the role on June 15th, 2021 at 32 years old. The youngest FTC chair that the United States has ever had. Basically, her only qualifications for getting in the position was a pretty good paper that she wrote back at Yale Law School that was called the Amazon Antitrust Paradox back in 2017. She was effectively arguing that traditional ways of going after anti-competitive market forces the issue that she raised was that antitrust law in the United States has started to focus a little bit too much on just prices paid by consumers, and they weren't necessarily focusing on competition within that market. So basically she's saying even though Amazon has the lowest prices, because it's non-competitive, that's not good, even though it's good for consumers and literally everybody else, and nobody's complaining whatsoever. But nonetheless, that's what she said, and she kind of advocated for common carrier guidelines, like what happened to the railways, the shipping companies back during the Robert Baron era of the late 19th century and early 20th century. So that was her qualifications for getting into the position. At 35 years old, she has lost basically every major case that she's gone after, except for a couple that we'll talk about in a quick second. But her whole plan was to come in and take down Amazon, take down Google, take down, Microsoft, all of these companies that she wanted to go after. Didn't really do any of them. The most notable loss was losing the lawsuit against Microsoft and Activision Blizzard, which, obviously went through. We talked about how much Activision Blizzard contributed to Microsoft's net income in the last quarter, just a couple of days ago. So that's why we call her Walking 𝗟𝗚𝗚𝗏. It's because she's lost basically every case that matters. And now a House of Representatives investigation found that the agency, 𝗟𝗚𝗚𝗏 Khan, chose to weaponize the agency on behalf of the Biden-Harris administration against Elon Musk's acquisition of Twitter. So they basically said, do anything you can to try to find a way to arrest this guy. So that's kind of why we all look at 𝗟𝗚𝗏 Khan as the biggest fucking loser in Washington, D.C. But turns out she's not as much of a hall monitor as we may have expected. Captain Clipboard, in fact, had a lower rate of merger challenges than we've seen in the past 2 decades. So according to Perplexity AI, from 2000 to 2020, the FTC challenged roughly somewhere in the range of 1 to 2% of all merger announcements. Meanwhile, during Khan's oversight, it was less than 1%. Now, Perplexity wasn't willing to give me exact data because it couldn't find the stuff, because it's tough to find, to be honest with you. So they said less than 1% is what they use, so I'm going to go with that. In 2023, they only challenged 15 deals. That was the lowest that we've seen since 2005. So really, it wasn't that she was challenging a bunch of deals, but that she was challenging very high-profile deals and losing the most important ones. Now, some of the ones that she won, blocking Amazon's $1.7 billion acquisition of iRobot. Who gives a fuck? Blocking NVIDIA's $40 billion merger with ARM. That one made sense, and that was done together with, what's it called? The Competition Market Authority in the UK or something like that. The UK antitrust regulator worked with her on that. Then at the same time, if NVIDIA bought ARM, what's ARM's market cap right now? So NVIDIA was going to merge with ARM for $40 billion. Back then, NVIDIA was trading at a similar market cap. Today, ARM is trading at close to $160 billion, and I don't need to tell you where NVIDIA is trading at. This thing would be $3.5 trillion if they bought that, if NVIDIA did buy this. And actually, there'd probably be a multiple on top of that, so it might even be $4 trillion at this point. They also blocked Lockheed Martin's $4.4 billion acquisition of Aerojet Rocketdyne, which was then purchased by L3Harris. So, yeah, she won the case, but it still got purchased. Berkshire Hathaway's $1.3 billion acquisition of the Questar pipeline was also blocked as well. How you have the nerve to block my boy Warren from doing anything really pisses me off. That's just fucking ridiculous. Okay, wow. I am very much out of breath, but the big takeaway here is that when Trump gets into office on January 20th, she's going to be gone within the first 6 months or so. Now, Biden had appointed her into the position by June of 2021, so that was actually right within those first 6 months. So we expect a similar performance from Trump. Don't expect, a bunch of mergers in the tech ecosystem, however, because as we all know, Donald Trump and especially Vice President-elect J.D. Vance, they do not like big tech companies whatsoever. So we're still expecting a high level of scrutiny within the information technology community, especially around artificial intelligence and especially around media consolidation. They do not want these big tech companies controlling a lot of the media mouthpieces across the United States. So expect a lot of scrutiny still in those sectors. But other ones, pharmaceuticals, like big pharma companies buying smaller biotech companies to add potential drug candidates to their pipeline, natural resources, mineral miners combining together to get scale and offer cheaper minerals maybe, especially at a time when the United States needs access to those kind of precious metals and the rare earths and all that shit. Financial services firms, it's going to be a lot better for basically everybody that's not a tech or a media company. So overall, M&A is coming back. We're going to make M&A great again here from 2024 to 2028. And then who fucking knows what's going to happen after that point. So very early election prediction from the Daily Peel Global headquarters. In 2028, this is what you're going to see. Republican nominee J.D. Vance going up against Democrat nominee Gavin Newsom. That's what we're going to see in the election. That is my guess right now. Mark it down. It's 5:34 p.m. Very early podcast here today, but it's 5:34 p.m. on Thursday, November 11, 2024, the 2028 election is going to be between J.D. Vance and Gavin Newsom. Now, that's provided that no fucking Thomas Crooks characters come out of the woods again and decide to fucking, do target practice on one of our presidential candidates. But still, we'll see what happens at that point. Of course, we want to leave you with a quote of the day from the walking L herself. A key question is not whether government shapes markets, but how government shapes markets and towards what end. That's from Lena Khan. I think an even better question is, should government shape markets? But hey, that is just me. And that about does it for us here today, everybody. Thank you guys all for tuning in once again. Appreciate all the emails that we've been getting. But God, there was one that I got today that I absolutely had to shout out here for you guys because it just absolutely made my evening here. Shout out to Leo for shooting over this email. Very minimalistic guy, loves the podcast, huge fan. He said that if I shouted him out, I would meet him in heaven one day. So, Leo, I can't wait to see you there. I'll probably be heading right back downstairs afterwards. But still, man, absolutely appreciate the outreach. Hope everybody else is having a wonderful week out there. Let us know what's going on in your mind, what your thoughts are, and we will see you guys tomorrow. Bye now.